Hey guys, Forex Thoughts from VK Forex. Welcome to our daily Forex technicals for 7/9/13. High beta rebound. As always, trading Forex on foreign exchange on margin carries high level risk and is suitable for all investors. I ask you to read this disclaimer very carefully. Understand that you should be aware of all those associated with trading Forex on margin and seek advice from a financial advisor if you have any doubts. Well, the beta rebound today amongst the high beta currencies today was very tepid. It really um, was not that impressive, especially in the euro. If you look at the hourly charts, basically we tested the post NFP lows here a little bit at the open of Asia trade at the start of the week, bounced back out to about 28.75, and now kind of are starting to float back down, back to the 28.50s. 28 definitely remains a very, very key support level. And if you look at the dailies, you can see why. Because basically, beyond the 28, right over here, we only have this 27, 25. After that, it really opens away all the way out to 25. So at this point, this very feeble rebound by euro, not that impressive yet for any kind of euro bullish moves. And the fact that we're kind of creeping, crawling back down to the lower part of the 28.50 handle over here, if we're going to cross it all the way to the downside, suggests that we may want to test the 28s again. If we test them again and hold and kind of build a stronger foundation, there may be a possibility here of a rebound all the way out to 29.50, possibly even 130 over the next couple of days. But for now, it really looks like the path of least resistance to the downside. If we can just break the 28s to the downside, it really does open up the run all the way out to 27s. And then after that, of course, if there's further pressure to the downside, it really opens up the run all the way out to 25s. It still feels like the euro is very much a sell the rallies mode. And unless and until it kind of recaptures 30 and holds above 30, the bias in the euro remains to the downside. Dollar yen, on the other hand, kind of holding its own, remaining steady. It popped up in yesterday's trade to about 101.50, but then came back off, holding around this 101. 101 seems to be the sort of 99.50, 101. Excuse me, 150, 101 seems to be the new consolidation zone, and it makes a lot of sense because this 102.50 is pretty serious resistance area. It really needs to break through the 102.50s to make a viable challenge towards the yearly highs of 103.50s. So it would make sense for us to take a couple of days off here to consolidate. The big event on the yen is going to be the BOJ meeting end of this week around Wednesday, Thursday. If we get positive news out of the BOJ, if they sort of come out with more dovish rhetoric and perhaps even more policy initiatives, we could really challenge the yearly highs of 103.50. Until then, it feels like we're just sort of marking time and moving our way around. Next, pound found. I didn't even realize I was making a poem here. Pound found double bottom here, 148, and did bounce back considerably better than the euro did for the rest of the day. But it's still finding a tremendous amount of resistance underneath the 150. 150 was former support, now key resistance, could not clear the 150. For pound to really regain even a modicum of positive upside, we got to come back, hold above 150 all the way really for on a daily basis in order for us to get a little bit more constructive on the pound. On the other hand, this is a double bottom. It is operating as such. A break here, though, a break below the 148s really does open up the run towards the 145s. It creates a much more negative structure. So similar kind of a thing. We're basically having a rebound in the pound, but so far the rebound has been muted at best. And of course, Aussie dollar actually looks best of all, not because I think of any specific strength of the Aussie dollar, but simply because it has just been so grossly oversold. And this 90 level has been such a key hold for the time being that we've had about 1, 2, 3, 4 days of sort of testing 90.50, 9100, and we seem to be consolidating. Whether this is just a pause that refreshes us, pushes us all the way down, we don't know. But I do think that certainly if we break 90, it's a negative move all the way out to 88.50, which is the longer term support that we've looked at before. On the other hand, if we can just kind of maintain this level here, a break above 92.25 is the key hold to the upside that puts us in a much more bullish situation. On a side note, yesterday I mentioned Euro Aussie as a possible turn trade, and today, where's my Euro Aussie here? And today, we really did have some nice movements to the downside in Euro Aussie. and it broke the 41 handle. So the correction in your Aussie seems to be taking place. You're definitely getting a lot more congestion here. So if you want to trade Aussie strength, one possible way here is perhaps through the Euro Aussie short. A break here of the 140s, in my opinion, is going to be a much more significant break to the downside in the Euro Aussie. It would suggest that we have lots of Euro weakness developing. It looks to be almost like a quasi head and shoulders, perhaps sort of a distributed triple top above here. But either way, what you can clearly see is congestion. You can clearly see 144 as the high here, to which we are even approaching, and a break of the 140s to the downside would definitely accelerate downside pressure. I still think it's a very interesting trade to the downside as an Aussie strength trade. At last, I kind of just want to take a look at dollar CAD, because dollar CAD has been very, very strong over the last few weeks. But this 106 level is clearly presenting itself as a very, very serious resistance level. And I think it's worth noting here that we just can't seem to break or at least hold above the 106. At the same time, though, we certainly can't break below the 105. So I think this 105, 106 consolidation channel could be very interesting. If we break one side or the other conclusively on a clean daily basis, could give us some directional clues perhaps for the next week to come. So that's kind of how the things are shaping up. It's going to be an interesting session. We're clearly at key levels. Whether this rebound builds or whether the rebound just fizzles and fails, it remains to be seen. But it feels still very much like sell the rally mode, especially in the euro, which looks to me the weakest of all as we kind of begin the day's trading. And let's take a look at it. And we're just flirting around with this 2850 level here. A break to the downside could take us right back down to a test of 2800s. That's Forex trading technicals for 79213. I'll see you guys, as always, on Twitter. This is Boris Lansberg for BK Forex. Over and out.